All right, hello everybody, and welcome. Welcome to the third class on Veshachanti's Financial Course. We are live on YouTube, and we decided that a lot of people fall asleep the second they hear the words insurance or tax. So we got someone who's really, really good at taxes to talk about taxes. And I present to you Fred Kahn. He's a partner and as well as an accountant at Philip Stein and Associates here in Yerushalayim. He'll be talking a little bit about being a dual citizen. And we apologize for any video quality interference, but we're doing the best we can here on this end. We will have 5 minutes around for questions at the end. And without any further ado, here is Fred Kahn.
Okay, thank you, David, and hello, nice to meet everyone. By way of introduction, as he said, my name is Fred Kahn. I'm a partner at an accounting firm called Philip Stein and Associates. We're a U.S. tax firm based in Yerushalayim. We have offices in Ramat Gan and Beit Shemesh as well. We've been in Israel for more than 40 years. I myself made Aliyah over 16 years ago. Just, by way of, a little background about myself. When I made Aliyah 16 years ago, my oldest child was 4. Now that child is 20 years old, so I have, seven children, thank God. The first 6 are boys from the age 20 to 10, and then a girl. So a lot of these issues that we're going to discuss here are issues that, I experience every day myself, with my family, and with our clients. So what I'd like to really walk you through is first, I think something that we'd like to do with Nefesh B'Nefesh, often we do with them, just basic Aliyah concepts, and then really get into U.S. taxation, Israeli taxation, some planning, and how tax integrates into that. And the topic really is maximize your tax return. That's what I'm going to try to get into, but it's really more than that. It's just the basics of understanding taxation, the systems of taxation that the United States has set up, Israel has set up, some of the not loopholes, but the advantages and things you should be thinking about and taking advantage of as you grow and as you develop, in the working world in Israel. And it's very much, it's dynamic. There are updates, and I'll even talk about one of the updates now. But the idea is to think and to take these things into consideration, but also understand that, as the other classes are probably touching upon, there's more to life than taxes. Even though I'm the accountant talking here, there's a lot more to life than this, and it's important to integrate what I'm going to say in terms of taxes into your overall plan, into life, and to take it, with a proper perspective. The first, slide I really wanted to go through with everyone is really we call it the 5 basics any Oleh should know. The first, and this is really fundamental to any job that someone takes in Israel, is that brutto or netto? Meaning, when someone gives you an offer and they say we'd like to pay you 15,000 shekels at a brutto salary, meaning pre-taxes, or a netto, what you'd like to be getting after taxes. People very often want to know, what's my netto? Meaning, what will I have in my pocket if this is my salary? I'm doing a relocation consult for a high-tech entrepreneur tomorrow, and his question for me is, I'm moving to the United States. This is the salary. What, how can I live on this? It's X amount of hundreds of thousands of dollars, but what's my netto? What's going to be my pocket? So the same thing in Israel. People make Aliyah, they have a job here, they want to know, what's my netto? The second question this week we get every day is, does that include ma'am? Does that include VAT? When you're offered a service, it could be an accounting service, a legal service, really anything here. The question is, there's this 17% tax called VAT ma'am. So when someone gives you, a quote for a service, are they including that in the price? When they say it'll be 1,000 shekel for me to do that, is it 1,000 shekel, or is it really 1,170? Are they including the VAT in it or not? So that's something that, you should definitely note to ask those questions in Israel. It's something very, very relevant, and smarter people usually ask us that question when we give a fee quote, for example. The next question really is there a discount? I think when we give a fee quote for our services, the many more years you've been here, the default is someone's going to ask you, okay, well, that's your price. That's sort of the starting point for negotiations. That's a pretty common practice here, to then ask for a discount. So sometimes when you're offering, you should know that they might be asking for that. So keep that in mind when you make your offer. The next thing is, can I pay in tashlumin, which is quite a common accommodation people like to make here. Paying in multiple payments, something people very often do, and it's culturally just good to get used to. And the last thing in this, I have a slide really towards the end of the presentation, is that samud lamadad. I mean, there are different indexes here for different things, but if, for example, you're buying into a real estate project, so the price you might think is X, but when you actually start, completing your payments for the building or for your apartment, you'll wonder, hey, why am I paying so much more than it appeared to be in the contract? And you'll see that the payments were all considered samud lamadad. They're connected to a certain index. In this case, would be the price of a building supplies index, and the price can go up if it's connected to that index. So it's important to read the fine print when one purchases something over a period of time. That samud lamadad, is it connected to a certain index, and to price accordingly, to understand, to budget accordingly when you do so, because it can make a big difference for people that buy in projects. For sure, it's a very big difference. Those are really our five, we call them our basic questions. That's what we start off with, typically, with anyone entering the Israeli world with more of an American background, if that's the crowd here. Now, I really wanted to start off with U.S. taxation basics. I'll then go to Israeli basics. Then I'll go to working here and how that all connects, and then how the two systems really interact. In terms of U.S. basics of taxation, the United States, unlike Israel, has, first of all, federal taxation. Federal taxation is what the United States has in common with Israel. There is a tax treaty between the United States and Israel, where if you pay federal taxes in one jurisdiction, generally speaking, you get a credit in the other, depending on if you're working in Israel, for example, and you get a salary here, you'll get a credit for the Israeli taxes you paid on your federal United States tax return, which you still must file. Meaning any U.S. citizen, I should be clear about this, any U.S. citizen that's earning income, no matter where they are in the world, needs to file a federal tax return. And even if the tax treaty with the country that they're living in gives them a full credit and they don't owe any U.S. taxes, they still need to file a return just to report that. And it's important. We've seen with people starting out in their careers that they remember to do that, because if they don't, bad habits go a long way. You think, well, hey, I'm paying taxes in Israel, I don't need to report in the United States, and then it gets more complicated. So we always say it's good chinuch, it's good education. Right when you start working, you have to file your annual tax return. And we've worked with a lot of our clients and their families to say, look, once your kids are a certain age, they need to file their tax return. We'll even give you, as I said in the previous slide, a discount, so to speak, to get them, educated and get them started, because we know that if they don't start, then life has a way of, I'll do it next year, and time passes. So the U.S. really has, first of all, federal taxation. Unlike Israel, the United States also has, 50 states, and each state has its own way of taxing people. Now, not every U.S. citizen needs to file a state tax return. If you reside in a certain state, or you work in a certain state, or you have, let's say, real estate in a certain state, then you very often do need to file in that state. The states don't have any tax treaty with Israel, meaning if you're earning income from real estate in New Jersey, for example, you'll have to pay that state, and they don't really care that you're living in Israel or anything like that. You have to pay state taxes on that. There was no federal treaty. There was no treaty between the various states and the Israeli government. So state taxes is something, we get it very, very often with Israelis moving to the United States about state taxation. They're really lost, because it's 50 different states with 50 different sets of laws, depending on where you are, that you really need to take into account. But state taxes is something that, is very different, United States to Israel. If you're making Aliyah and you're used to always paying New York taxes or even New York City taxes, suddenly you come to Israel, you don't need to pay those. So those are a real benefit. That if you have no connection to that state anymore, you don't need to file a state tax return anymore, only a federal. And the third U.S. tax I like to really go through is Social Security. Now, again, if you're a salaried employee in Israel, and I'll get to this in a later slide, then you don't need to pay Social Security. But if you're self-employed here, you're an atzmai, then you do. And if you're on a U.S. company payroll, even if you're here, they're going to withhold Social Security at source, and they're going to make you pay it. And that's something, when you want to know what your bottom line is, you'll notice that it comes 7.5%, and it comes out of your pocket. So your netto, so to speak, is definitely reduced by Social Security. The benefit of Social Security is that if you pay in for 40 quarters, meaning 10 years into the United States, then even if you reside in Israel, you're eligible for that benefit when you retire. And one of the real benefits in Israel is that the U.S. Israel tax treaty says those Social Security benefits, when you get them, are actually tax-free both in Israel and the United States. So whereas someone living in the United States would have to pay tax on their Social Security income, someone in Israel does not. So a lot of pensioners, a lot of pension people, when they're at a pension age, like to get their Social Security in Israel because they get it tax-free. But that's, I think, not where everyone's holding now, but paying into Social Security used to be something that people actually very much wanted to do when they resided in Israel, because they wanted to they looked at it as a sort of like a pension, that if they paid in enough that when they got to retirement age, they would be eligible for it. Now, less so. We're seeing less people volunteer unless they have to pay U.S. Social Security. But if you do pay in, or if you've worked in the United States for a bunch of years and you have a bunch of years paid in, then people are very interested to pay it in. But in any case, it is a tax on U.S. source salary and everything. You will see it, and you do pay it. If you're again paid, if you have a U.S. employer or you're self-employed, even in Israel, which we'll get to more in detail. Israel, taxes 101 is Israel has something called Mas Hachmasa, which is it's like a federal tax. It's the Israeli tax authority. They also have Bituach Leumi, which is very much it's Social Security. It's Israeli Social Security. Now, just keep in mind that when you pay into Bituach Leumi, Israeli Social Security, the benefit you get when you get to be of pension age in Israel, there's no correlation between how much you've paid in and what you get, which is called Kitzbat Zikna. For elderly people, they get a certain amount of Social Security benefit from Bituach Leumi. Now, that doesn't really correlate to how much you paid in. In the United States, the amount of Social Security benefit you get one day does very much relate to how much you paid in. In Israel, it doesn't. So that's people take that into account with Bituach Leumi. And the third Israeli tax that I put down here is Mas Briut. And I wrote here there are really other social benefits that for Israeli taxes that you're paying into healthcare. You're paying a health tax. But if you look at your pay slip in Israel, there are a lot of other benefits that are being taken and that you're paying into. For example, in Israel, there's for employees there's a mandatory pension that which is tax-free money from your employer and from your own salary that you're putting in, that you pay into every month, and you'll get a statement as to what that is, and it grows, and you can take it out when you reach a certain age in Israel. Those are all great benefits, but again, if you want to know what your netto is, so to speak, what your take home is, you will see that you are contributing some of your own money in parallel to your employer to it. So it does take away, so to speak, from your bottom line. But you should know that those benefits are out there. The pension, there you do get, for example, here also a travel allowance that your employer should pay, and you want to know from them, is the travel allowance, for example, is that included in the salary? When they offer you the salary of 15,000 shekel, the assumption should be, hey, whatever my travel allowance is, that is added on to the salary offer that they're making you. There are other benefits that I'll get into a little later, but there are a number of social benefits. There are cars, there's something called Karen Shalom. We'll get into all of that. And those are all benefits that might affect your sort of take home, so to speak, when you get it. But these are really the three basics for both U.S. taxation and Israeli taxation. You have your Mas Hachmasa, which is the federal, you have here Bituach Leumi, and you have Mas Briut, health tax and other social benefits. I wanted to get into something that's a very common question when someone really is starting out, more to do business or to be a consultant, for example, in Israel. And they say, should I really just be an employee? Should I be taxed as an individual? Or let's say I want to be taxed as my own corporation. I want to start a corporation. I'll have a few clients, or even I'll have one major client, which is my employer essentially, and I want to do things differently. So what's really the difference between the two? So I'll really start with individuals. With individuals, you get the benefit of something called graduated rates, which I wanted to show everyone soon, a tax table of the Israeli tax rate. So if you're taxed as an individual in Israel, you pay graduated rates. One of the real benefits that people really, really appreciate with individuals, meaning sachirs, employees here in Israel, is that there are minimal reporting requirements. In Israel, unless you're making a certain amount of money, if you're just a regular salaried employee, there's no need to file an annual tax return. If you're making, I think it's more than 500,000 shekel now, it's closer to 600 in order to need to file a return. So if you're just a regular salaried employee, as an individual here, you don't need to file a tax return. You still will actually have to file in the United States if you're a U.S. citizen. But Israel says, look, if you're making below a certain amount, we're not going to force you to file a tax return. It's fine. We already withheld at source all the taxes that we believe you owe us, and don't worry, there's always enough withholding for them. So if you want to file a return to get money back, for example, if you've given charity, so you can either submit the charitable receipts to your employer, if there's what's called C46 receipts to your employer, and they can make sure you get what's called a 35% credit, meaning if you've given 100 shekel to charity, to a C46 charity, they'll give you back the 35 shekel, 35% back, just by netting it with your actual taxes on your payroll without you even filing a return. There are ways to do that, but if it's more significant, or you've already passed your last payroll, then you can file a very simple return and you can get your credit for your charity, for example. The last thing that an individual has the benefit for, and I think I'll get into this a little bit more in the future, is nikudot zikui. A nikudot zikui is the Israeli equivalent of exemptions, basically. It's this point system they have to reduce your tax rate for Israeli tax purposes. Now, for example, just if anyone reads the news, Israel just extended the amount of nikudot zikui and the length that you get them for an Oleh Hadash, meaning someone that made Aliyah recently. They've now extended a very, very reduced taxation regime that they're going to receive for X amount of time after their Aliyah, which basically means that they increase their nikudot zikui, their point system, so to speak. In Israel, they've elongated that amount of time where you can really be working here and paying a lot of taxes. Another important thing to take into account, and this is the way Israel does things, is that the spouse, meaning the wife, gets the benefit for young children, which is a major source of nikudot zikui and reduced taxation, is given to the wife. It's not a joint filing here. For some reason, the way Israel does it to encourage both spouses to work is they'll say, okay, nikudot zikui for children under a certain amount of age, which is a real tax break, that only goes for the wife if she's working. The husband doesn't get the benefit of that. So that's something to keep in mind as an individual. It can be very significant and very, very relevant, and Israel does encourage both spouses to work for that reason and in that way. The next slide is really just for everyone to see, okay, these are the Israeli tax rates. I downloaded it. These are the rates, per month or per year. And what we like to say is really once you're at closer to the 35% bracket, then once you take into account bituach leumi, you're paying closer to 50% much earlier in terms of your take home. Because after about 500,000 shekels, you stop paying bituach leumi. So at that point, anyways, you hit 50% and you just sort of stay the same, because even though your tax rate might go up, since you're not paying bituach leumi, you just stay sort of stagnant at 50%. You're never going to really pay more than 50%, but you do pay 50% much earlier than you do in the United States. In the United States, you might never pay 50%. If you live in California, then if you're at the maximum federal rate, if you're earning above $650,000, for example, plus California, then you'll hit it. But in Israel, you do hit it faster. So the lower brackets in Israel, we always say the taxes are really much more reasonable. But once you get to the higher brackets, which happens much quicker, then that's what Israel is known for in terms of the higher rates. But if you're a very significant earner, then in both regimes are going to be United States 37% plus state, which if you're in New York, California, that gets you close to 50 federal plus state. New Jersey gets you in the 45 range, also a little bit more than that. So you can get there with federal and state, but in Israel, you hit it much quicker. So it's something to keep in mind. And we like to show people this slide just so you can see what the tax rates are without the nikudot zikui, without those discounts are. Now, if someone decides that they want to be a corporation, meaning they say, look, my employer is in the United States and they're paying me. I don't want them to be self-employed, or I'm going to actually open up my own company here, and I'll take a salary from that company after the income comes in. So then, or I'll take dividends. The way it works is your company would pay what's the corporate rate in Israel, which is 23%. And then you'd have to take a dividend after that, which the current rate in Israel for a dividend would be 30%. So if you take 30% after you've taken 77%, meaning of the 77 remaining after you pay 22% corporate tax, then you pay 30% dividend tax. It gets you to 50%. So at the higher brackets, it's the same, but if you're a lower bracket earner, it's definitely not worth it to be a corporation. Keep in mind the Israeli fees for running a corporation are quite significant. And also corporations do need to collect VAT as well. So that's something very much to keep in mind and understand. You need to do that and open up a file with VAT. So a question we get a lot from people really starting out here, maybe starting out with a small business, or they're a private practice, or they have someone in the United States that's paying them, but they're not going to be on a payroll, is, okay, well, how should I get paid? What's the best way to operate here? If you're not working for Facebook or Google here, a major company that says, look, you're going to be an employee of our company, or of a big tech company, but they're saying, look, we're flexible how we pay you, or you don't have one official employer, you have a few people that are paying you smaller amounts of money. So the question we get quite often is, how should I operate here? What's the best vehicle for me to operate it? So we like to say there's four ways of doing it. The first is what we discussed until now. It's to act as an individual. Very simple. I want to be an employee of this company. You need to pay me as a salary, even if I have 3 different employers. I want everyone to pay me as a salary. I don't want to worry about filing tax returns. That's one way. That's probably the most simple. The next way is either through an osek morshet or an osek patur, which is the United States equivalent of being self-employed. Now, in osek patur, there's certain criteria you need to reach in order to be characterized, to be able to be considered an osek patur. The beauty of osek patur is there's no VAT or anything like that, but I think if you're above 100,000 shekel in terms of your earnings, you can't be an osek patur, and only certain businesses can, and then you end up being an osek morshet. Now, with both of these, osek patur and osek morshet, then you have to worry about your own bituach leumi filings, and osek morshet also VAT, and of course, regular tax. And the issue is there's no tax treaty with the United States on the bituach leumi, meaning after you've paid, mas haknasa in Israel, the Israeli tax, and you get a credit on the U.S. federal for that, and then you pay bituach leumi here. You still then need to pay U.S. Social Security tax because U.S. says, hey, you're self-employed and there's no totalization agreement between the two countries. Therefore, we want our Social Security as well. So that even on a very low salary, a person can be paying 50% tax. Let's say they're paying, 20% Israeli tax, 15% bituach leumi, 15% Social Security in the United States. And not a lot of money. You don't have a lot that you're bringing home. So that's a real downside of that. What you could decide is, let me be a chevra ba'am, let me open up my own corporation here. So once you're your own corporation, you can either take dividends, as I said in the previous slide, or you can just pay yourself a salary, revert back to individual, and then you don't have to worry about at least Social Security tax, because on salary income on individual, there is a tax treaty. And the last, I guess, the more creative for someone that's, doesn't have an employer, so to speak, is you can have a PEO, which is basically, there are certain companies in Israel that'll say, look, if you need an employer have the person paying you pay us. We'll pay you a salary, but of course we'll take a processing fee for doing all that. But then you don't need to open up a file with the Israeli tax authorities and with Bituach Leumi and all these other things. They take care of all the paperwork for you. They do everything for you. They give you a salary slip. You don't have to worry about paying U.S. Social Security. So there are advantages to the PO for people that don't want to deal with a lot of the paperwork here. And depending on your income, your income and your attention to detail might be the right way to go for you. It can make things very, very simple. It's become more popular. We work with some of them, but they take a fee for doing that. Some of them even can give you benefits that employees can get, and you might not have had. So it is something to look into, to know about that it exists as an option for you. The next slide is really just, as I said, family planning and benefits. Just things to consider, with children and spouses, really. That, as I said, first of all, Israel does encourage working mothers. They do give them the nukudot zikui, and I've seen families where every dollar that the husband earns, if the wife, she could earn smaller amounts, but she's actually taking home more money because her tax rate might be zero because they have X amount of young children, and she's getting a huge benefit. So we've seen that, and it does work. So sometimes people should take into account that a smaller amount from the second spouse can really go a long way in terms of cash flow in a family. Israel also does give kitzbat yiladim. It does give a certain amount per month for children. And the U.S. also does give stimulus payments on child tax credits based on earnings, and that can be a nice check at the end of the year for people. During COVID, they were giving out also significant payments. There are some of them that you really are not entitled to, so it's important to go to an advisor to understand what person is entitled to, what they're not entitled to. It used to be that the maximum income you could have in order to be entitled to these payments was quite low, so we had to figure out the best way to file in order to do that. Now you can earn, I think it's up to $400,000 and still be entitled to these payments, to some of these payments. So that can be amount of money. We very much also encourage direct deposit of these on your tax return that you need. Okay, the next slide is investment planning points and benefits. Now, this really connects to something I think investment advisors call your core capital, meaning at the end of the month, the person wants to know, okay, what do I need to live on? And based on that, is there any money I can put away at the end of the month that'll grow for me in a tax-free way? So the most well-known of these plans in Israel is something called the Keren Hishtalmut plan, which was developed many years ago, and it allows an employee. First of all, the employer needs to have such a plan. But if your employer has the plan, you need to ask, am I entitled to participate in this plan? And there are different ways you can set it up with your employer. Some employers, they'll put in, let's say 7.5%, you put in 2.5%. Some like to do it 5%, 5%. Or you could say, look, I'll pay it all. I just want to put this money away. So there are many ways to do it. But the idea is if you contribute and up to about little more than 15,000 shekel, you can take for 6 years. At the end of the 7th year, you're entitled to take it out for Israeli purposes, tax-free. I don't want to get into the U.S. taxation of this, but for Israeli purposes, it would grow tax-free for 6 years, and then you could take it out. And that, for some people, is how they buy car. It's how they can start, doing work on their house. It's real money that saves away and grows year after year in a tax-free manner, so it compounds, and the earnings are reinvested, and it does grow very nicely. And a lot of employers offer it. And when you start a job, we recommend asking, do you have a Keren Hishtalmut plan? Am I entitled to that plan? How do you contribute to that plan? equivalent is an IRA or a Roth IRA plan, which if you're a U.S. citizen, are entitled, if you earn a certain amount of money, to contribute. If you earn a certain amount but not too much money, are entitled to contribute to. If it's a Roth or a regular IRA, has more amounts, but that's all money that you can put in, and you can let it grow also tax-free. So there's only a certain amount you can put into these plans, to do a regular or to a Roth. But that money, again, you're not going to see it if it's those plans till you're a pensionable age. So it's really long-term money to put away. But if you do have the liquidity to do it, it's money that can compound and really grow very, very, very nicely for a person. And if you have the money, if you have the cash flow to put it away, it can pay dividends long term. You'll say, okay, this really is continuing to grow. How Israel will look at a Roth or regular IRA is a more complicated topic, but we do have many clients that do contribute to these plans. And if a person has the liquidity to do it, again, that's what I'm talking about. If you have to sit down and budget and think if you can do it, but if you can, there are tremendous benefits to both Karen Ishtamut, IRA, or Roth plans. Another, planning point or benefit that I wanted to bring down is, company car. A lot of companies, most specifically probably in the tech world, offer as a benefit a company car, and included in that could be a very, very nice amount of gas. So that really is a nice benefit that people like to. That you are taxed on that benefit, meaning Israel has a way of determining what they think the benefit is, and you do pay tax on the fact that your employer is paying for your car, but it's only for the car, not for the gas. So there really is a real benefit to the company car, and then you're not worrying about your insurance on and everything like that. So that's when you're starting out here, it's good to know that it is a benefit that's relevant, and a lot because of the price of purchasing cars here. It can be very expensive. A lot of people take advantage just to have a car. They'll go through their company to get it, and it's a benefit that's not uncommon in Israel. In terms, I wanted to put a slide, even though this isn't so directly related to taxes. There are a lot of tax implications, so I did want to give one slide to home ownership versus renting. Israel has, acquisition tax, which, mas v'chisha, it's called here. When a person purchases a home, depending on the value of the home, the tax rate, that tax is actually supposed to go up for more expensive homes very, very soon. So that's affected the markets actually. But for first-time homeowners, there's a real discount on that. For Olim, there's a discount. A lot of people have actually made Aliyah recently that want to buy expensive homes because they really want to take advantage of that acquisition tax discount for an Oleh, or for a first-time homeowner, for young couples to have that. So it's important to know that the discount is there and to make sure you get it. Additionally, if you're selling, your home and you made a profit on it, there is an exemption or a discount for your personal residence that you're selling. So it's important to know about that as well. The U.S. also has such a concept for a married couple of an exemption on gain of $500,000. A fundamental difference for the world of renters is that in Israel, the arnona, or the property tax, is paid by the renter in Israel, as opposed to in the United States, where the owner actually pays it. So obviously, I guess in the United States, the owner is taking that into account when they determine the rent. But it's important for an Israeli person that's coming to rent to realize that, hey, does my rent include paying the arnona? Does it include paying something called the vad bayit? All those things. So it's important to know that those fees are around and they're paid, and who pays them is important. The last point I really wrote about home ownership in Israel is that there is a significant down payment needed here, much more than you're probably used to in terms of the United States. There is a lower amount for first-time young couple homeowners, but there is typically more needed as a down payment in Israel, and the processes can be significant here in terms of buying and understanding what the down payment is here. That's really just on the very, very basics of home ownership and renting. There's a lot more to that, but I wanted to give everyone really the basics on it. If you own a rental property here, for example, there is actually a big exemption in Israel for rental income that the United States doesn't have. As I said, I tried to keep this slower, and I will, now that I'm getting to the end, leave a few minutes for questions. But really, in summary, I wanted to summarize this, that, again, consider long and short term for investments, meaning when you're starting out, it's important to understand, okay, what do I need to live? What can I put away for investments, and look at the long term and the short term for your investments, whether or not it's getting into a Karen Ishtalmut plan, whether or not it's buying versus renting, whether or not it's putting money into an IRA, whether or not it's paying into Social Security. All these things, it's important to look at the long term and the short term in terms of a person's where they're going, where they are now. The next one is really, it's important to understand the pluses and minuses of being an employee versus a freelancer here, as I discussed in the earlier slides. The reporting requirements, the U.S. Social Security, the possibility for going through a PEO, the corporation, all those things, VAT, just to understand all the pluses of being an employee versus if a person wants to be a freelancer, how they want to do it, and understanding all the different possibilities there. And then, as I said, really last, taxes need to be in context and perspective. It's important to understand that taxes, as much as I'm on the tax side of these presentations, and I'm a believer that we should make decisions that are tax educated. It can't always be the driving force. There are a lot of other things to consider. Cash flow might be one of them, for example. There are many others. So it's important is it a good investment, not good investment, not necessarily what's the tax on the investment. I didn't get into really, what's the tax rate for interest, dividends, long-term capital gains, short-term capital gains. But in any investment that you're making, it's important to understand the tax ramifications, and also don't just go with the tax. Also understand, is this a good, sound investment or not? So it's always good to put our taxes into proper perspective and context in terms of your overall financial picture. That's just a word about us. We're a U.S. CPA firm here. We help a lot of people that have dual filing requirements. We work with a lot of Israeli CPAs to really give people solutions that take into account both Israel and U.S. tax. We always say that if we're not saving you your overall taxes, then it's not necessarily a great tax plan. Meaning, if I'm saving you U.S. taxes, but you're an Israeli taxpayer and you're still paying a lot here, I haven't saved you bottom line. The idea is to save you on the bottom line, to really save people on the money that they take home, which really needs to be thought through by someone that understands both U.S. And Israeli taxation. So, thank you for listening. I very much support the program that's going on here that Ray Luger is spearheading. So I'm happy to participate. And if anyone has any questions now, I'm happy to stay on for a few minutes. Matzlacha with living here and earning here and succeeding here.
Thank you so much. I really appreciate it. I think I'm saying that for everybody. We do have a question lined up. Question is, what are the ramifications of having a part-time job in the USA, living in Israel, when the primary job is in an Israel company?
Again, you're living in, let's start slowly here. You're living in Israel, right? So you're going to have to pay Israeli taxes. Is your employer the Israeli company or the U.S. company? That's really, that'd be question number one I want to understand. Because if the employer is an Israeli company, then you can be paid as a regular employee here. If the employer is a U.S. company, then you need to get into, well, okay, how am I going to be taxed in Israel? Do I want to ask them to pay into my PEO? Do I want to be what's called an Osek Morsheh? Do I want to be my own company? Or that sort of gets us into that whole that list of things that I mentioned there earlier. So this question is, if your U.S. employer is paying you, then you really need to see, do I want to be a subcontractor and deal with Social Security tax or not? It's preferable just as a default to be paid by an Israeli employer in that case, typically, because then you also get the Israeli benefits.
All right, fantastic. I believe those are all the questions. No, wait, we got some more coming in. Okay. This is an anonymous attendee asked, where can I find out more about Israeli taxes on American investments such as mutual funds? What about American taxes for Israeli investments?
So again, those are two different questions. Israeli taxation on U.S. Mutual funds, it'll be dependent on interest, dividends, or capital gains that you're getting from the mutual fund. Typically, Israel taxes all of those at 25%. U.S. taxation of Israeli mutual funds is a complicated topic, and it can be very dangerous in terms of tax. So be careful if you're considering investing in the Israeli markets. Mutual funds for U.S. citizens can be very problematic.
Okay, I believe those are all the questions for now. The information on how to contact Fred will be available in the description on YouTube, as well as sent out via the follow-up email. If everyone who joined can please fill out the survey so we can continue to bring you really high quality content to be able to be of service to you the best we can. We'd really, really appreciate that. And yeah, thank you so much, everybody, for joining. If you want to do some chazara on this class, it will be on our website at www.veshachanti.com, as well as on YouTube, on our YouTube channel. Thank you, everybody, again, for joining.